Well, hi there. Welcome to How to Read Tax Returns and Close More Loans. This is the 9th edition of this course, which has now been improved and updated for reviewing and analyzing 2014 tax returns. It's my belief that once you know where the numbers come from and become proficient in analyzing tax returns for your self-employed borrowers, you'll be able to get more loans approved, period. There's some other compelling reasons too, such as developing a reputation within the CPA and financial community as being an expert in working with self-employed borrowers. Now, there's plenty of courses available on how to read tax returns, and some of them take a whole day dedicated to this subject. I've attended several of these myself and can tell you that they're great, but I want to bring you this course from the perspective of a fellow loan officer right there in the trenches alongside of you. I've worked with a lot of self-employed borrowers, I've looked at a lot of tax returns, and I know how to get these loans approved and closed. A quick word of introduction. My name is David Kuiper, and I'm just starting my 25th year of originating mortgage loans. My practice is based in Holland, Michigan, and I've personally closed over 6,000 loans totaling over $1 billion. I've had the honor of being ranked among the top loan originators in the country for over half of my career now, and I'd attribute a great deal of this success to hard work and to being a student of our industry. So congratulations on making the financial investment and the investment of your time in participating in this class. But enough about me. Let's get on with it. I'm going to warn you that there will be a lot of slides coming your way and that I'll be going through them quickly, but don't worry. I'll highlight each of the areas on each form that you're going to need to focus on, and then at the end of the presentation we'll be providing copies of the slides and tax forms and notes to recap everything that you're about to learn or refresh your memory, as the case may be. Of course, this is a little more dry than some courses as it's pretty technical in nature, but I'm going to try to have fun with it if that's okay with you. So remember, if you learn just one tip today, you're going to be better off because of it. The underlying principle of this course is that taxable income does not equal cash flow. Today's presentation is designed to be an overview of reading, analyzing, and understanding the tax return so that you can derive what true cash flow actually looks like for your self-employed borrowers. My goal is to help you think like an underwriter, prepare you to go to the mat with an underwriter, and familiarize you with the common elements that you're going to be seeing time and time again. And understanding the why behind the numbers is what this is all about. So I'm sure you've heard in the past something like, oh, I went stated income last time, or my tax returns didn't look so great last year, or something like that. Well, obviously stated income loans are a thing of the past. Some originators just take these comments at face value and don't even try to work with a self-employed borrower. Or they'll go through time and energy, also called pain and agony, of collecting the tax returns and making copies and then not knowing what to do with them once they've done so. In my experience, you'll typically find more cash flow in a tax return once you learn how to read them than what's being reported as taxable income. That's one of the beautiful things about being self-employed, right? I once had a client who owned multiple businesses, and his tax returns showed taxable income of about $500,000, which is not all bad, right? But after analyzing all of the interrelated businesses, his true cash flow was over $40 million. And I'm pretty sure I can qualify somebody for a loan with that sort of cash flow. So knowing how to accurately calculate cash flow for your self-employed borrowers will help you submit your loans with the correct income calculation the first time so that your underwriter knows that you know what you're doing and isn't tempted to second guess your figures. And once you've got a great relationship with an underwriter who knows you know what you're doing, it'll just make the loan approvals that much simpler and smoother.